Before today's lesson starts, I want to give a warning that this is not financial advice, just my personal analysis. What it do, guys, crew? Welcome back to another video in the channel. If you haven't already, go ahead and subscribe, leave your boy a like, and with that being said, let's get into today's lesson, where today we're going to be talking about chart patterns for bullish and bearish signs. Alright, so today's video, the first pattern of the day is going to be a symmetrical triangle. And as you can see here, I have it charted out with these two white trend lines. And first I want to show you a reference of what this looks like. And here's that reference. So as you see, we had an uptrend into this top line coming down, which would be resistance, and then this bottom line coming up, which would be support. Now the reason these two are resistance and support is because price hits, bounces down, not once, twice, but 3 times, and then for support, price came down once, twice, and 3 times, and bounced up, and then initially broke, and then pushed to the upside. So with that, you can see just right here, we had 1 from the uptrend, right? 1, 2, 3, resistance, 1, 2, 3, support, and then we had the break. Now, at first we had structure break, and then we had red candle hold and close above structure break. So then while we're waiting for retest, which it did, the third candle was bullish engulfing. So that is a good indication of entering for the trade and holding all the way up from about, let's say you entered at the top of this candle, 117.43, you could have cashed out around 118.40, 118.50 if you held it up to these red wick candles. So if you were in that play, good job today. That was a live trading session in XOM today. So that'll wrap up the first bullish pattern of the day. So with the second bullish pattern being a bull flag, this was also on XOM, charted in today's session on the 3-minute, and it indicates obvious bullish trend. With that being said, how you chart it out is you first take your trend line, find the uptrend, and then when you have a slight angled drop, how you can see it kind of comes at an angle, you would take your second trend line and run it across from the top of those points all the way down like so, and then from the bottom of those points where it kind of bounced up and then dropped too far, and that is how you would chart out a bull flag. Now for reference, this is what a bull flag looks like. You got the uptrend, 2 lines across with the angled kind of consolidation channel, and then you wait for your break, and there it was. So around this area I would have entered, set my stop loss below this first break candle, and let that puppy ride. And that is just a very helpful pattern that pops up a good bit to give you that edge any day of the trading week to make some good money, quick moves, and overall just show you where the trend will be going if the pattern is respected. So with that, on to the third. On to our third bullish chart pattern. We're going to be looking at a cup and handle today. Now, in the XOM Discord, we've all known that we're trading in a cup and handle, and we all know that means a bullish indication. So this is what that looks like. It is a very simple chart pattern to find and chart out on TradingView. It's really simple. All you got to do is go to the curve line, set it up here like it is. It'll curve it out, put another curve line, and then you would just take 2 trend lines, find the highest point of the beginning of the handle, put it down, and then you'd wait for your structure break like we had here. So we have the initial break to the retest to then the bounce up, and now we're just letting this puppy ride out to eventually break our all-time highs of 123.76. Now, with the reference photo, this is exactly what a cup and handle looks like. We got the swoop down to make the cup, then our handle, and then our breakout to pass our all-time high. Right? So that is a perfect example of a cup and handle charted out on XOM. So with the fourth bullish pattern being what we like to call an inverse head and shoulders, which is the opposite of a head and shoulders that indicates bearish. This chart pattern called inverse head and shoulders indicates bullish. So with TradingView, you can easily chart out head and shoulders by going over to the patterns, clicking head and shoulders, and charting these out. With reference photo, here we can look at this, come down from downtrend, stop out at a point, bounce up to a neckline, bounce back lower from the initial first drop, and then bounce again to the neckline, drop down, but not as far to make that right shoulder, come up to the neckline, and then wait on the initial push out of that. So you can see this dotted line across is the neckline. Once stock has broken that, you would then wait for your entries and let that puppy run. Alright, so that completes the first 4 bullish chart patterns, and now we are on to our first bearish pattern called the head and shoulders. This is a very well-known chart pattern that all traders should know because it indicates big downside movement. So in this case, this was charted out on XOM, and thanks to TradingView, we have the great pattern that you don't have to just put a bunch of trend lines. You can easily just throw it up here. It'll show you where your left shoulder, head, and right shoulder is. And then as you can see here, once we broke that neckline, we gapped down and then eventually stopped out at the low and reversed. But with that pattern, you could have had a great play from Thursday to Friday if you were holding on Wednesday after that initial break of neckline and then cashed out at the bottom like a pro. Here is that reference as well. As you can see, got your left shoulder, your head, right shoulder with the neckline, and then you just wait for that initial break and hold below the neckline to then enter and play the downside. Either for the short term, long term, you just have to play how it is, see how it goes, and get as much money as you can from the stock market. And yeah, that is going to complete the first bearish pattern. On to the second chart pattern of the day. This is what we call a bearish symmetrical triangle. It is similar to the bullish symmetrical triangle, but it is going to the downside instead of the up. So it's the same concept with how you chart it out. Here is our reference photo. So we got our downtrend to our first resistance line coming down to our support coming up and meeting in the middle, waiting on breakout. And as you see, it played out perfectly. This was actually into today's QQQ live trading session that this played out perfectly on the downtrend. So if you were in this, good job. If not, that's why I'm showing these videos, so you have that edge with chart patterns over the market to make some money. So now we're going to be going into our third pattern, which is the bear flag. For our third chart pattern, the bear flag, this is also on the QQQ. This is a very well-known pattern opposite from the bull flag. This is what we call the bear flag, and here is that reference photo. See, we got our downtrend for the flagpole, and then that initial upwards horizontal consolidation to then draw our top trend line and our bottom trend line. And then you see how well it played out perfectly to the downside after we waited on structure break, and just like that, that is a solid chart pattern to have in your bag. This is what our double top is looking like The reference photo I'm about to show makes it seem like the double top has to be perfectly lined side by side, but that is not always the case here. They can be one higher than the other. Just regardless, you'll see that it forms an initial point to a drop to another initial point to a drop and then break past this neckline. So with the reference photo, you see how it's a perfect, symmetrical directly across. That is not always the case because the charts don't always perfectly move like that. So don't think you have to wait for the most perfect setup right there. What I showed is a pretty perfect example of a double top, and you can see how well it actually played out after it broke past the neckline. So yeah, with that being said, that is all of the chart patterns I have for you today. If this was helpful at all, please, comment down. Let me know that the gas screw is here. If you want a part 3 on some more chart patterns, let me know down in the comments. I will be making that. And if you have any ideas or subjects that you want me to go over, also let me know down in the comments. I'll be making sure I keep an eye on all of them so I get back to you if you guys say anything down there. But as far as that completes the video for today. I hope it was helpful. I hope you took notes, and I hope you have a successful rest of your trading week. I will catch you guys in the next one.